Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very nice day in the markets today, and hopefully you had a very nice long weekend with your friends, your family for Thanksgiving. Hopefully you're all well rested, relaxed, and ready for another crazy week in the markets. In today's action, the S&P and the Qs down a little bit, but not as down as much as they were when we first started trading this morning. If you will see, there was a lot of damage done in the overnight session on the S&P, but also on the NASDAQ. Take a look at this big drop that happened right here in the pre-market last night in the futures, and also on the NASDAQ as well. From the top to the bottom of that move, it was a pretty steep one, about 1.25% on the NASDAQ and about 1% on the S&P. And that weakness did last a good portion throughout the night. And then when the markets opened, the buy the dip crew showed up and kind of erased some of the damage, not all, but all in all, guys, a very decent red day in the markets with multiple sectors ending in the red. So what exactly happened last night to trigger all this selling? Well, it had to do with our good old friends over there in Japan with the Japanese yen carry trade unwinding a little bit, not quite unwinding, but there are some fears surrounding that trade with the potential of it unwinding shortly. Japan's two-year yield hits the highest since 2008 on rate hike bets. I will remind you that the Bank of Japan is going to possibly increase interest rates in about 2 weeks' time. And this is putting a lot of pressure on the yields. As you can see right here, the two-year Japanese bond yields hitting 1% for the first time since 2008. Why does this matter? Well, it's because the yields have been so low for so long that it's led to something known as the Japanese carry trade, whereby large institutions and large traders alike are going to borrow Japanese yen, the currency, at a very low yield and then reinvest that money, the Japanese yen, convert it into dollars and invest it into equities abroad around the world. Now, of course, when the interest rates rally in such a steep fashion to where they haven't really done that much, right, in the last roughly 10, 15 years, but in the past year, there's been a lot of pressure on these yields, and as a result, borrowing costs to borrow that Japanese yen, well, of course, those borrowing costs are skyrocketing, and as a result, people have to start winding down their bets, essentially, right? There's been a lot of pressure on the liquidity overall in the market. It's been a very popular trade for the last 15 years, and we first saw the effects of that, you might remember, last year in good old August, when it first started unraveling. It's been quite the trade ever since. Now, people have wound down significant bets since that time to where there was a lot of leverage in the system. There isn't as much, but every single time that there is the premise of the Japanese government raising interest rates, it puts a lot of pressure on that too. And the bonds are definitely feeling it right now. And traders and institutions that are part of that carry trade are feeling it as well. So I'll remind you that trade is also encompassed in our short-term bearish narratives. Whenever we get a little bit of pressure from the Japanese segment, the yen carry trade argument comes alive, the narrative comes alive, and it can put pressure across global markets. You can see right here that in terms of the daily performance of the Nikkei, right? The Nikkei was actually substantially down to start off the week, right? 1.5%. That is the Japanese stock market, essentially, and it carried into the early hours of today. But U.S. traders and institutions alike were able to kind of buy the dip and alleviate some of that pressure that was in the system overall. But it is something noteworthy to keep in mind. We're going to have to keep a look at what the Japanese government does with their stimulus package, around $160 billion in stimulus that they're planning to do. We will have to keep track of whether or not they do increase interest rates or not in about 2 weeks' time. And we also have to keep in mind what the Federal Reserve in the US is going to do with their own interest rates, because all of this plays into the exact same thing. Essentially, how much liquidity is in the system right now. Now, speaking of liquidity, we had another thing that happened today. This one right here, quantitative tightening is officially over. Yes, absolutely over. Now, this has been in place since about 2022, to where the Fed was casually running off its balance sheet into the market and basically sucking liquidity out of the market overall. Now that it's ended, this is a nice liquidity event for the markets, but another big liquidity event will be the result of the interest rate decision on December the 10th. The interest rate cut probabilities for December the 10th are still around 87.4%. So obviously, when you have liquidity concerns surrounding the Japanese carry trade, surrounding the uncertainty around the federal interest rate cut, but you have one piece of certainty, at least from quantitative tightening, it's a lot of push and pull in the markets, guys. And the first things that kind of take a big hit are risk-on assets, which is why Bitcoin and Ethereum fell off an absolute cliff in the overnight session into today, which kind of also added a bit of pressure into equities for the risk-on sentiment. But that liquidity in crypto all kind of started happening on Friday, October the 10th, when you had a very big amount of liquidations in the market. Of course, a lot of brokers actually went underwater. And since then, it's just been kind of unraveling and unraveling as there's been very low amounts of liquidity overall in the crypto system, but arguably in the overall markets too. So the theme of the day is liquidity. Now we'll have to keep an eye on that liquidity moving forward. But today, in terms of overall volume in equities, it wasn't bad, right? A little bit better than the Friday session, which was a half day, but still low volume on the S&P, lowish volume on the QQQs as well. Definitely not as high as we saw a couple weeks ago when we had that massive Thursday sell-off. So still, traders and institutions getting back to their desks. So we will see. This week could be quite interesting because we have a lot of things on the table. Now, in today's video, we're going to take a look at a few things together. Number one, we'll be going over some other news pieces that came out today. We'll go over some of the Black Friday sales, some of the NVIDIA deals that happened today, and a few other components that I found interesting for our analysis. So we'll take a look at some of the news headlines from the day. Thereafter, we will do a technical analysis rundown of our major market segments, see how the rotation is playing out, which sectors are currently possibly ripe for investments, and which ones are leading, which ones are lagging, etc. Then we will do that on our big tech list down here as well, and derive of all these companies on this list, which can be good swing trade opportunities, long-term trade opportunities, and possibly even long-term portfolio buys. So we'll cover that towards the tail end of the video. At the very end of the video, we'll be briefly going over the biggest gainers and losers of the day, which is quickly turning into everybody's favorite segment of the videos. And to wrap it all off, we'll take a look at my portfolio for a few trades that we made today and which positions I'm carrying into the rest of the week. If you guys watched the top 5 options plays video yesterday, you guys probably found a ton of opportunities from that video yesterday. So hopefully you guys were able to eat very well in the markets today. I definitely know that in the Discord, we had a lot of trading opportunities and that our members really benefited from a lot of the action in today's markets. And hopefully you guys watching the YouTube videos were able to participate as well. That being said, that's going to be it for today. Let's jump right into it, shall we? So the SPY down about 0.5%, the Q's down 0.34, and overall, not a very good day, right? That weakness that happened in the futures market yesterday carried in to today's trade, and the damage was done, and we never really turned around, right? NVIDIA, Apple, Amazon trying their best to hold up the markets, but tech was a very mixed bag today. Financials not participating at all, because when it's a question about liquidity, when it's a question about the battle between interest rates and bond yields, etc., well, unfortunately, even US yields were moving higher today, which did put pressure on the financials trade. Healthcare pulling back, but they've been a market leader for the past month, arguably, so taking a bit of a breather there. Not too big of an issue, very normal price action. And the bottom half of the market, sadly, very mixed as well. Definitely not as broad as we were seeing last week, that's for sure. In terms of your one-day relative performance, you'll see that even better, to where not many sectors were able to make it out of today alive. Only energy and, surprisingly, consumer cyclicals, consumer discretionary. One of the lone participants to the upside here, XRT, is the ETF that I used to track that one. And of course, that had to do with some very favorable Black Friday numbers, which we'll cover briefly on the channel. Thereafter, to the downside, most of everything led down by utilities, unfortunately, mainly because the yields are rising today, which puts pressure on sectors such as real estate and the utilities, right, which don't have that much growth, but obviously provide good dividends. So when you have a competing risk-free yield that's higher, well, obviously those other trades kind of fall underwater. The 1 week relative still stands to be one of the healthier looks here in the market, where most of your sectors are still green, but today just a little bit of a day of pullback as we come back from the Thanksgiving long weekend and start off the good old month of December with a bit of a red day, right? The monthly candle in December starting off with a little bit of downside, a little bit of a tail. Now, is this going to continue all month? And are we going to revisit some of the lows of November? Or do we have some good odds of maybe pushing higher for an end of year rally? We'll try to make the we'll try to make a good analysis essentially on the channel, try to do a good analysis on the channel in terms of what we can possibly expect for the month of December. So that being said, guys, that's your overall market rundown. Now, in terms of the news headlines, right? Well, this week is going to be very volatile. Just as a bit of a preview here, tonight we get Jerome Powell speaking in about 25 minutes from the time that I'm recording this video. He'll be speaking just a university speech. He'll be speaking about the end of quantitative tightening, the impacts in the market, of course. I don't believe he's going to talk much about the direction of interest rates, but we may be able to read between the lines. if he makes any comments about the economy overall. Moving on further to the rest of the week, we have a few key jobs reports that people need to keep a watch on. ADP employment change on Wednesday, and the challenger job cuts for the month of November, which comes on the Thursday session. Obviously, the balance of risks right now for the Fed has shifted from one of inflation to one about the labor market. So, of course, these labor market reports really matter to the market a lot. So I do think if you get any volatility this week, it's probably going to be on Wednesday and Thursday as a result of those jobs reports. And then on Friday, we get the good old PCE and core PCE inflation data, which should show that inflation is still remaining a little bit sticky around that 3% range. If we get a downswing on this, the markets will probably like that. If you get a little bit of an upswing, I assume people will kind of say it's the one-time impact of tariffs, which the Fed has been commenting on as well for the past few months. And if you just take a look at the overall inflation, I like to use Trueflation right here because it gives a really good measure of 15 million different products measured by SKU every single day. And you'll see here, just refreshing the page, 2.44%, right? Not that bad. And I do believe this represents a better indication of inflation in the system right now because the basket of goods measured and services as well is very, very, very large, much wider than you would find in CPI or something like a PCE measure as well. So keep in mind those news elements for the week. Those will be your volatility catalysts for the week. In terms of earnings, I mean, you don't have much. You have a few key big players here. Sorry, the screen apparently wants to refresh right now. A few key players throughout the week, such as CrowdStrike, which is going to happen tomorrow, and a few other big ones, such as Salesforce, Snowflake, and then a couple more throughout the week, but nothing that's truly going to move the markets in a very big fashion. Maybe just only have some impacts here on their respective index in their respective niches of the market, but nothing truly market moving. We're truly through, the bulk of the earnings season right now. Now, in terms of some other news events that happened today, which are noteworthy for the markets, you have your Black Friday results right now. AI helping drive a record $11.8 billion in Black Friday online spending, which I'll remind you is currently a record, up 9.1% from last year. Cyber Monday projected to hit $14.2 billion in online sales as well, which additionally would be a brand new record. So pretty good. Now, this article doesn't summarize everything, but if you guys want the gist of things, a number of those purchases were made on, well, not a number of them, a decent amount were made on buy now, pay later solutions. Klarna was talking about it. Affirm was talking about it a little bit too. Amazon has also come out and commented on the fact that they had a very good Black Friday showing and that their AI product Rufus was able to help people shopping, right, overall, and had a very good impact on their sales. So overall, Black Friday, in my opinion, the market will take this one as a win, even though the economy is a K-shaped economy right now. Consumers are still spending. Are they spending on credit? Are they spending on buy now, pay later? Yes. But is it a concern as of right now? No, because it's not the majority of people, but it is still a K-shaped economy. But the market seemed to have absorbed this headline quite well over the course of the day today. Additionally, which came in after the close right here, U.S. Commerce Chief confirms that South Korea's 15% tariff rate will be retroactive to November the 1st. So finally dropping the tariff rates on South Korea. Now, that is a drop from 25%, I'll remind you. And what they were waiting for was for the parliament in Korea to pass the spending bill, which would authorize them to invest $350 billion into strategic industries in the U.S., including shipbuilding. That was recently passed today. And as a result, the Trump administration following through with their promise that if South Korea came through with that big investment, they would drop the tariff rates. And as of right now, the tariff rates have been dropped from 25 to 15, and it will be retroactive to November the 1st. That was fairly interesting too. Additionally, you have some news on NVIDIA. NVIDIA taking a $2 billion stake in Synopsys with expanding computing power partnership. That was very good. It just goes to show that NVIDIA is still the king and kind of like a venture capitalist investing firm at this point in time. NVIDIA is just throwing money around, making investments, strategic investments in so many different corporations recently. This is just the newest one. Upon that news, Synopsys very early this morning jumped up about 7% before ending the day at, let me just check before I say something that's not true, about 5%. So not quite the high of the day, but still not a bad day for them overall. It was a big jump in price for that company. As part of the multi-year partnership, NVIDIA is going to help Synopsys accelerate its portfolio of compute-intensive applications, something that GPUs are very good at. Maybe not so much TPUs. Advanced agentic AI engineering and expand cloud access. The partnership we're announcing today is about revolutionizing one of the most compute-intensive industries in the world, which is design and engineering. Once again, there's been a whole big battle on the internet about TPUs from Google versus GPUs from NVIDIA, who is the king. And I've been saying this for the past week. Overall, they serve two different purposes, right? Not everybody is trying to develop a chatbot or a large language model with AI. TPUs are very task-specific things. They can be repurposed for many different things, of course, but usually they're very task-specific. GPUs are more broad overall. There's obviously many more discrepancies than that, but just goes to show that NVIDIA's products can be used in many more things than simply just creating AI models, many different applications for those NVIDIA GPU units. And the demand constraints still for those GPU units are very, very real. So although NVIDIA has been kind of in the mud recently, the demand for their products is really, noteworthy at this point in time. Additional news right here, we have more indications that the next phase of the AI ramp is going to be all about power, and possibly that could be a nice focus of our investments into 2026 and 2027. The data center power demand will be jumping from 40 gigawatts to 106 gigawatts by 2035, nearly 3x and 36% above its April outlook as AI nears 40% of all compute. That is huge, and utilities companies are responding by a big build out of their own. Take a look at this. Utilities plan to almost double the grid capex from the last few years into the next 2 years, 2025 through 2027. Overall, you can see right here how much they're actually going to start doing in terms of the distribution, generation, and transmission of electricity overall. So heavy investments right now being placed into energy and electricity infrastructure, just whole different cohorts of power, whether it's nuclear power, solar power, natural gas, traditional electricity generation measures, or traditional electricity generation methods as well, right? So that being said, energy is still going to be a very hot topic, and I've been talking about it for about the past month and a half, but you will be seeing more energy trades from me overall on the channel. And those are your major headlines that I thought would be interesting to bring to the channel today. Hopefully you guys enjoyed that summary of where we stand in the markets, what we have in terms of volatility events into the near-term future. And now let's get into some charts to see how we can make sense of all these narratives, all these headlines, and possible volatility events throughout the rest of the week. So I'll remind you, in terms of the S&P, what we were possibly anticipating is that upon the return of institutions, now that we know that we were in slightly overbought conditions on the hourly timeframes, well, we may be due for a slight pullback, and the slight pullback is definitely underway. In terms of where we stand right now, well, obviously it was a daily downtrend with a very nice engulfing move, which gives the bulls a ton of space, not to go to the absolute moon, no, but just to reset the daily uptrend, right? If we backtest this region right here, 674 down to 666, it would look pretty good on the chart for a bit of a daily higher low being set and recapture of the daily uptrend into the month of December. I'll remind you, there's a few reasons why we hold the bullish leaning bias. Number one, the monthly chart has never been lost. Number two, the weekly uptrend has also never been lost. Despite being challenged a few weeks ago towards the end of November, the bulls are now looking very good in terms of that retracement size, and a few other indicators that give us a bullish leaning bias in the market too, which all have to do with breadth and momentum, right? So if you take a look at your percentage of stocks above their 20-day EMA, very beautiful push, guys. Now, of course, this can't go up in a very straight line, but what you want to gauge is whether or not market breadth is healthier than it was relative to where it was just a few weeks ago, and that is definitely the case. 62% of all stocks are currently now above their 20-day EMAs, coming into the high. So we want to be buying down here on any weakness, especially, right? And it was a very good opportunity to be doing so, especially when the VIX was clipping into very high 20s, right? When you couple low breadth with high fear, usually it tends to be a short-term local bottom in the markets, and that's exactly what happened. You can take a look at exactly the percentage of stocks above their 50-day EMA as well, which is still pretty decent. 50% of all stocks are still above their 50-day EMA. As I said, we're not expecting a straight line move right here, but we can possibly be anticipating improvements in overall market breadth in relation to what we saw throughout the month of November. And the percentage of stocks above their 200-day EMA, that's still pretty decent here at about 56%. So breadth has been improving relative to where it was. And as a result, your fear and greed index has also been improving relative to where it was a few weeks ago when this indicator right here read 6. I'll remind you guys, this is not sentiment, right? No, it is a bunch of different technical indicators in terms of the market momentum. How far away are the indexes from their longer term moving averages? You'll see we are still in a fearful environment as we're fairly close to the, well, not fairly close, but closer than we once were prior in the last months of summer, August and September. Of course, stock price strength in terms of net 52-week highs and lows on the New York Stock Exchange. Still in terms of extreme fears, right? The pullbacks have been pretty substantial and not many names are clipping into new all-time highs, which is why this still reads extreme fear. Stock price breadth as well, measured by the McClellan Volume Summation Index, is still at extreme fear reads. However, it has been getting notably better from the lows. And I have that chart right here for you guys. Not that one, this one right here, right? The McClellan oscillator jumping from very negative now to very positive. This is a great sign that market breadth has been improving overall, and the returns on a 1, 2, 3 week basis and 1 month, when you go from such a negative read to a positive read in a short time span, usually it does lead to some sustained gains. It doesn't mean you're going to go up in an absolute straight line. It just means that the bias is shifting from short-term bearish to short and medium-term bullish as well. We have a few other indicators as well, such as the MACD crosses starting to happen, whereby your percentage of stocks with a MACD buy signal is now above the 32% line. Whenever that's happened coming out of lows, as you can see from this chart, usually it does tend to represent some decent areas of interest for institutions and retail to further position into a possible next leg up in the market. And the last one has to be this one, the good old Zweig breadth thrust indicator. This happens when you go from very low market breadth and then to very big market breadth in a short amount of time. I mean, you could probably sense from this chart right here, the percent of stocks above their 20-day EMAs, right? This is a massive, massive push. And the last time this happened was in August, very rapid. And the time before that was, of course, during the month of April and May coming out of the tariffs. When you get this, guys, this is usually a very good indication that possibly you've achieved a local market bottom, that you might just be heading for some decent market performance in the next few weeks, arguably into the next month of trade. At least every time that this indicator has fired off, it has led to some pretty substantial gains in the short term, which is why we have a short-term bullish bias on the indexes. So those indicators, right, the breadth indicators, the fact that the VIX is now a bit lower as well, and the fact, well, the market's getting a bit more broad, right, leads us to believe that most of these dips might probably be leading to a possible trend change for the bulls. As a result, if we do get some dips early on in the week with the volatility catalysts, right, we want to be participating by possibly selling some short puts or bidding some of our favorite companies that are still somewhat trapped at some of the lows that we saw just earlier, right? Not all companies have had tremendous lifts recently, not all of them at all, which is why in the past few videos, I've been making a mission of, telling you guys what my core buys in this current market landscape would be. So if you do get a nice pullback here, probably a nice breakout retest for a buying opportunity, possibly go for a long into the end of year momentum. Moving on to the QQQs right now, Qs down about 0.34, but same concept, right? Daily downtrend, beautiful engulfing move on some very nice market breadth, not on high volume, on good market breadth though, which arguably is more important, right? That being said, we might just get a back test. We're already back testing here. We tried it this morning. The bulls said, no, we're going to play some defense around here. We'll see if they can keep that up. 614 at about 604 is the support area. Prior resistance for the markets, support, resistance should be newfound support as well. And all the daily EMAs are right in that location too. So that's why we do have a bullish leaning bias, because the bulls have a great probability. Notice I say probability, not certainty. We have a great probability with all of the momentum indicators, with all of the other indicators, such as the McClellan oscillator ratio, right? The MACD buy signals and the Zweig breadth thrust, and just the overall recapture of momentum in the markets, and the fact that we've lifted a lot of uncertainty surround the rate cuts. All that in combination gives us bullish leaning probabilities and a bullish leaning bias that many of these short-term dips, such as today, could be nice buying opportunities for some of our favorite companies in the market, or at least an opportunity to sell some puts on your favorite companies under where they currently stand, right? Moving on to financials right now, financials down about 0.83%, but we talked about it. That's because of the Japanese carry trade, which kind of carried into the 10 and 20-year yields in the US as well. Notice this big green day on the 10 and 20-year yields, putting some pressure on the financial segment, but also putting some pressure onto a lot of rate-sensitive sectors as well. But financials was kind of a, collateral damage in that whole trade today. So that being said, nice bounce on financials overall. We'll be looking for the good old daily trend change, because now we're just trapped, guys. We're stuck, right? Stuck between resistance, which is 53.30 down to about 53, and below support, which is 52 all the way down to $50 right there. So we would probably be looking for a higher low. Tons of space off the lows here, 51.25, to create that higher low and go maybe for the daily trend change and put an end to this weekly chop zone that we've been stuck in now for a few months on financials. The weekly doesn't look very good. The daily obviously looks extremely choppy as well. The clearest time frame for me, guys, is the monthly chart, right? It is still a very beautiful monthly uptrend into a rate cutting cycle, into a quantitative tightening ending cycle as well. All very good liquidity catalysts and bullish catalysts for the financial segment overall, but it has been a little bit choppy. I do agree with you, but I do expect into 2026 that financials can have a pretty good time. Some of the companies that I'll be exploring that I've been talking about for weeks at this point in the videos, right? MasterCard, phenomenal buy right here below the 12 EMA. MasterCard has not done anything all year, despite having phenomenal earnings all throughout. The chart has not done anything. I'll remind you, the last time that this was the case was back here. We called it out on the channel in 2024. We made some very decent money in the next few months after so much consolidation. Visa, as well as the exact same pattern, has been doing nothing for literally the past 7-8 months, despite posting very good earnings. Now, the valuations on these companies are at some of the lowest that they've ever been. Free cash yield on Visa is at one of the highest points it's been recently, and the price to earnings on a forward basis is at the lowest it's been. So Visa and MasterCard, very good discounts right now, but even some of these companies that have a very large debt repricing pipeline in terms of the credit rating businesses, right? In terms of SPGI probably still a very good bet in the market into 2026. And Moody's as well, probably a very decent bet into 2026 after these two companies have been doing nothing but consolidate for almost the past year. However, what they have been doing during that time is improving their fundamentals. And these are the types of plays that I love. Companies that have been improving fundamentals for a while, called it a year, and the share price just hasn't been following. Usually that's a disconnect that I do want to play, especially when we talk about high quality companies with very wide moats. Moving on to XLV Healthcare right now. Healthcare was leading the market, and now in the past few days, it has been pulling back. That's very normal. We clipped into the previous all-time highs. We were a bit weekly overbought conditions, very extended from the EMAs. And I was saying, if we do go for a bit of a pullback, it would just be very natural. That being said, the daily higher lows are here, 151, looking for a possible higher low for maybe further trend continuation. And even if we don't get it, guys, right? If you get the daily downtrend shift right there, it's perfectly fine. There's so much space on the weekly, anything above 143, just looking for a weekly higher low. It would not be so crazy to see healthcare have a bit of a pullback. Healthcare is arguably the best performing segment in the month of November. When the rest of the market was doing nothing and kind of just slow bleeding, healthcare was doing its best to kind of hold up everything. So hopefully what can happen this month is everything else starts to participate and healthcare gets a bit of a well-deserved breather. Moving on to semiconductors right now. Semiconductors not with a bad day at all, continuing the daily engulfing move. It was a big daily downtrend, which the bulls have kind of tried to unwind recently last 5 days of trade, creating a lot of space off the lows. Anything above 315 will be looking for a daily higher low attempt to try to reverse the daily uptrend. So any little bit of a weakness will bring us down into the big old chop zone of support, which is 345 down to about 325. I know it's a wide range, guys, but that's just the range that we've kind of established in terms of price action. You can see MACD is crossing not only on SMH, but on everything, right? This is why we take a look at the MACD buy signals, right? On the daily on the S&P, MACD cross buy signal. Take a look at the NASDAQ, MACD buy signal, right? This is like a month of negative momentum finally shifting. Now, that doesn't mean that we just go up in a straight line. It just means that relative to this period in time right here, it may be looking a little bit more bullish in the near-term future. And semiconductors, obviously being one of your lead bulls in the market, are going to be the focus of a lot of people's trades and mine as well. So that being said, guys, the weekly timeframes are not looking too bad. The weekly lows are possibly set at this point. We might just be looking for a bit more expansion, but it could be a little bit choppy as we kind of embark into the month of December. Moving on further, moving on to the Russell right now. The Russell down a little bit, but they had a huge push during the Thanksgiving holiday week. That being said, if we do pull back, you guys know the drill, right? Where are we going to pull back into? Possibly the EMAs and possibly this area of support that we just cracked through that may be acting as support again. That area is 240 down to about 237. So it could be a nice breakout, retest, and run trade with a stop loss below there and a take profit along there. If we do pull back into that region, it would look pretty decent for a short-term swing trade. Overall, though, guys, the bulls made very quick work, right? right, of this weekly little downturn that we had right there. Nice fib retracement right there in terms of the size, right? You're looking at a over 78% retracement. So in the event we falter from here and are a little bit soft, you could possibly be expecting maybe a two-stage recovery of the weekly uptrend because we lost it, right? We lost the higher lows right there. So now they need to fight to kind of get it back. Small caps not looking too bad. I'm not necessarily playing the ETF, but I am playing individual names here and there. And that is pretty much everything for your overall index rundown. Hopefully you guys enjoyed. We'll take a look at some of the other sectors maybe tomorrow or something like that, because we did do them on the Saturday video. Moving on to the VIX right now. The VIX up 5.54% because there was a few macro things the market was dealing with very early on this morning, such as this one right here, right? The Japanese carry trade, which did put a bit of volatility back into the markets. But overall, we are not really in a high VIX environment anymore. If we see a bit of an upswing from any of the macro catalysts that we have this week, such as the jobs reports, right? Well, once again, if the VIX goes higher and that leads to a bit of a SPY downturn into our support level, you guys know the drill, right? What I'll be doing, very simple, when the VIX goes higher, I'm a big fan of selling some put options on some of my favorite companies. And some of my favorite companies were given in the top 5 options video that I posted last night. So make sure you guys have a look at that one because I'll definitely be playing a lot of those companies if the VIX moves higher and I can get some very attractive strike prices. We talked about the yields a little bit. We're not going to talk about it any further. The yields are going to be very choppy, guys, until we get the December 10th, December 10th rate event. We don't know if it's going to be a cut. We assume it's going to be a cut, but we'll see what the Fed has to say. I assume these bonds and the yields are also waiting for the final confirmation just because it's been a very volatile last few weeks in terms of the rate cut odds. Moving on to gold right now. Well, gold actually had a decent Monday, right? It's just been kind of slowly moving higher right here. Nice daily uptrend overall. The higher lows are down here at about 4,030. So if we do get a move lower, looking for a bit of a higher low. For possible further trend continuation, we have a bullish leaning bias, of course, because the weekly was never lost. Still a nice weekly uptrend right here. The monthly was never lost and is not even pulling back yet, right? Despite being very overbought. So just keep an eye on your levels, right? If we entered long here, well, then obviously that is where we'd have to put our stop loss back to break even. You might remember I entered a gold long here with a stop loss below the low. Now that we've moved into profitable territory on the trade, well, you want to set a kind of stop loss at break even. The last thing you want to do is kind of absorb this drawdown. If they falter, go into a bit more weekly consolidation, kind of like down here, or worst case scenario, into the big monthly consolidation phase on gold. But gold is not looking too bad. I don't want to predict out too far. Just pay attention to the levels, especially this one right here, 4,030. But as of right now, the bulls are still in short-term control. Moving on to crypto. So crypto got absolutely washed again, right? Low liquidity environment, still some problems with the brokers overall, led to this absolute disaster. It's crazy that crypto has come down so hard, so fast, right? Bitcoin from the top, we're currently still down 31%. And not much has really happened other than the disasters with the market makers in crypto, of course, right? But that's something for another time. Moving on, guys. I mean, it's up to the bulls. We have to set a daily uptrend. What I was saying back here, guys, it's a massive daily downtrend. We need a better bounce size, right? Because at that stage where we were ending last week, that was not even a 50% bounce. Arguably, it was like a 38% bounce. So obviously, with such a weak bounce, if you start rolling over the time frames, the bears are still in full control. You have to give me a daily uptrend shift if you want to say that this is the absolute bottom. If I do not see a daily uptrend shift, I cannot say that this is the bottom, nor this is the bottom. They have to prove it to us. When they prove it to us, then it becomes easier because then if you get a daily uptrend break above 94, well, then it's very easy. I can set a stop loss below this area, call it a tradable bottom, and go for the re-expansion of the weekly trade. But all these time frames are going to take some time to reverse because it's a daily downtrend. It's a weekly downtrend on Bitcoin as well. And the monthly has just come too far. The cut is too deep, essentially, right? That's a very big retracement. It's like an 80% retracement. Usually when you have 80% retracement, guys, the odds are not in the favor of the pure V-shape. If anything, it does favor a longer two-stage recovery process, right? You take a look at all these fib retracements here, they were not that deep, which is why the bulls were able to make quick work of it and make a new high, right? This right here was barely a 40% retracement size. This dip right here, right? This was also a 50% retracement size. When you give back too much, guys, you just get all the juice out of the trade. It's very hard to push these markets higher again, especially when all your liquidity gets flushed out and people are kind of nervous surrounding this trade overall. But we'll see what happens. We'll take it one day at a time. but I'm not doing anything other than just nibbling on some Bitcoin for the long term. No short-term swing trades from me. I need to see a new daily uptrend to confirm that I have a tradable low. Moving on to Ethereum, the same concept, right? I do not have a tradable low just yet. It's been a sweeping daily downtrend. The retracement size of the most recent move was very soft, 38.2%, very soft, which is why the bears can just clobber the attempt by the bulls if that retracement size is not big enough, right? They haven't created enough space to absorb that selling, right? We haven't even got the resistance area fully back just yet. We're still kind of oscillating in here, 3,200 down to about 2,800 overall, very soft weekly downtrend as well. And that's a big cut on the monthly time frame as well, right? It's a very, very big retracement size right now. It's about a 618, right? So this is like last stand for the bulls overall. They can still recover this, but it's going to be very tough, man, to put in like 2 huge months worth of rally like this when you have so much negative sentiment in this market right now. First step, before we even project that far out, give me a new daily uptrend. When I get a new daily uptrend, right, the break here is where I would do my entry, stop goes below the low, and then we can start talking about maybe pushing towards 3,800, 4,000. But until that time, the short-term bears are still in absolute control. So the only thing we can do is do long-term positions, yes, but short-term positions, I mean, you're kind of just still catching the falling knives of a perpetual downtrend right now. So we'll see. We'll take crypto one day at a time, and we'll keep you guys updated as much as we can. That's it for your overall market rundown. Hopefully you enjoyed that. Now, let's jump into our big tech names. Moving on into Apple. Apple's just continuing to dominate, man. New all-time highs right now, breaking out right here. Daily uptrend is still in motion for Apple. Apple held up better than most all big tech names, possibly because they just didn't do any AI investments whatsoever. So it's kind of hard to fault them for any CapEx or depreciation cycles or NVIDIA versus Google battles, right? When they just don't even have any skin in the game. So Apple, very strong, but not going to take anything away from them, right? Their iPhone 17 sales have been absolutely stellar, and they did guide for a very nice Q4 when they did report their earnings just about a month ago. So daily uptrend, very nice on Apple. Super tough to position up here, guys. Very greedy long, in my opinion. Daily overbought conditions, it's been there for a while. Higher lows are right down here, 265. Any pullback looking for a new higher low. Just pay attention to these guys, right? New higher low, possibly for continuation, but we're getting very extended on the higher time frames right here, even on the weekly, right? Very, very, very extended from your 12 EMA right now. The weekly higher lows are now set with this beautiful breakout right then, and we are very far away from the 12. So it's a super greedy trade going long on Apple up here. It's weekly overbought conditions, it's daily overbought conditions. The monthly time frame is also very extended from its own 12 EMA. So Apple up here remains a hold for me. I'm not buying any more shares. I'm not selling any more shares. They should have a very good Q4, but I'm definitely not adding any swing trade longs up here. Just a very greedy style of trade, which is not really my personal style. But if it's yours, best of luck, of course. Their valuation also is a little bit stretched up here beyond 270 at the mid-30s multiple and over a 3 peg. Moving on to AMD. AMD was up 1% today. Now, this is a stock that I can kind of get behind because they had a really nice pullback for a few key reasons, right? Well, number one, daily downtrend right here. The bulls put in a bit of work here. New daily uptrend recaptured. So this is when the swing trades can come alive a little bit, right? Because we have a new daily uptrend. As a result, we know that the bulls are trying to set a weekly low right here, a weekly higher low in the context of an uptrend, by the way. So as a result, if we're trying to do any swing trades, stop goes below the low, and we are targeting the previous highs, and that is not a bad risk to reward trade overall. Oops, that's the wrong button. This is the type of risk to reward, right, that you should be kind of looking for your swing trades. It's not quite a 2-to-1, call it a 1.6, 1.7, but it's not all that bad. At least you have some form of a tradable bottom to be basing your trades off of. And if we do get any further weakness or something like that, well, still, the VIX is relatively high and the volatility on AMD is still relatively high. 190 down to 175 is an area that I would not mind selling some put contracts into because that's where most of your price action currently still stands. So I am a fan of buying some short puts down there or buying long-term shares because long-term shares should always be bought with the premise of valuation in mind or with the thought of valuation in mind, rather, under a 1 peg around 200. Now, at 220, this is like 10% higher. So it is a 1 peg. That's about an 8-something price to sales, which is still fair for a company growing revenue and EPS at such fast clips, which is the guidance that was provided, of course, during the earnings, but also during Lisa Su's Investor Day that people forgot very quickly after, but hopefully you guys might have been able to kind of nibble on that dip. Very solid company, in my opinion. Moving on to good old Amazon. Amazon had some really good Black Friday numbers, and as a result was one of the only names today. Well, initially during the day, everything was red, but Amazon was one of the only ones that was green. Thereafter, we had a few names that caught up, such as Apple, AMD, Netflix, and NVIDIA thereafter, but Amazon did a good job of kind of holding green for a majority of the day. Now, they didn't close at the high of the day, but still, not too bad. We are making our way into resistance right now, 240 down about 230, daily downtrend. It's an okay size bounce right now. Take a look at the size of this bounce in terms of the fib retracements. That's not a bad bounce, man. 50%, not quite 618, but very close, right? So the bulls create enough space off the lows right here. Anything above 215, looking for a new higher low to possibly reset a new daily uptrend and tackle this resistance range. If we do get a bit of a drop on Amazon, you guys know the drill. I will be selling some short puts down here into the low 220s area, into my 100-day EMA, into my weekly support range, which is 220 down to roughly 205, this whole little pocket that we've been playing a lot over the past 3-4 months. And the valuation of Amazon is decent. So trades for me, short puts down here, yes. But adding some shares, I'm not opposed to adding some shares at these levels either, because around 220, guys, you're under a 30 forward price to earnings and a 1.4 peg with phenomenal earnings that were just reported by the company. Moving on to Google right now, Google down about 1.56%, and Google kind of sliding from the top right there. It was a bit of a blow off top, wasn't it, on Google? Daily overbought conditions right there, weekly overbought conditions as well. RSI on the weekly peaked above 80, and look how far we are away on the monthly 12 EMA. Super far away. This is a massive push by Google, and also on the weekly, right? Super far away. That being said, the bulls still control the trends, right? Anything above 270 right here, 270, looking for a daily higher low, maybe to continue the trend. But if they lose it and we go into a daily downtrend, you shouldn't be surprised. That would just be very healthy weekly consolidation. There's a big gap to be filled right there. The weekly higher lows are at the same location down there, 270. So you would just be looking for some casual consolidation on this stock with multiple overbought timeframes right now in around the 320 region as well. I mean, Google's not that expensive. It's a 1.9 peg. It's a 428 multiple, but definitely a lot more expensive than it was when we were buying it back here. And the last times that I DCA nibbled were here when the valuation was still fair. Up here, I'm not adding any Google shares. I'm not selling any Google shares. I'm just holding for my long-term portfolio. But if I had shares in a swing trading account and I wanted to reallocate some of my Google profits into other names that have been coming down recently, that would not be the worst pivot in my opinion. But for long-term portfolios, I'm still holding Google for the next 5-10 years. I'm not going to play the swing trading game of trying to sell my shares here, buy them back here. No, because I have because I do recurring DCAs into my portfolio every single month, I'd rather just add to other companies right now. And if Google ever comes back and picks me up again for more shares down there, well, that's when I'll start adding to my Google position again, because I plan to hold all my Google shares for the next 5, 10, 15, 20 years type of thing. Moving on to Meta right now. Meta down about 1.09%, but Meta had a very decent rally recently, right? Big daily downtrend into daily oversold conditions. I was telling you guys, probably a decent buying opportunity historically, because we don't get daily oversold that often on Meta, man. Last time was during the tariffs, and the time before that, you would have to go back all the way to 2022 to find daily oversold conditions. Couple that with a very nice area of support, which was 600 on a 550, and you end up with confluence, which is my favorite thing. When we find confluence of many indicators, usually it tends to be a good buying opportunity. So hopefully you guys are able to add some Meta shares if you do enjoy this company. I'm not trying to push this one on you. I'm just saying for those of you that have Meta and wanted to add, it was still a good opportunity and is still a good opportunity right now. Daily downtrend, the bulls with a nice engulfing move, but a bounce is only a bounce until you change the trend. Shout out to Bitcoin and all the other charts that look like this too, right? So you're going to need to confirm a higher low and higher high pattern to really say that, okay, your weekly lows are officially in, and we're not just in for another weekly leg of downtrends, right? So that being said, we'll watch for it, but Meta, I'm still a fan. If we have a big account, I'm still a fan of selling some put options down here. I am also a fan of adding some shares, because I do believe that in the roughly 630 down to call it 600 pocket, the valuation is very fair. Low 20s multiple, a 1.63 peg, and a low price to sales metric overall with decent revenue and EPS expansion. That is if you can get beyond the CapEx and expense profile of this company. Moving on to Microsoft right now. Microsoft down 1.07%. Rejection from resistance above 500 down to about 490. So Microsoft, this was a big area that the bulls used a lot as support for the better part of the past 4 or 5 months. And now, sadly, guys, they're using it as resistance, right? So in terms of the fibs, right, not too bad of a bounce right there. That's over a 50% bounce. So it does give the bulls an opportunity to, reset the daily uptrend. They may not be able to just smash through this resistance in one clean shot. So if you need a bit of a pullback before doing that, well, the bulls have created enough space to try and make that attempt, right? Weekly is still arguably no longer in it. Well, not arguably, it's a de facto not in a weekly uptrend anymore, right? Weekly consolidation and monthly consolidation at the same time. You guys know the drill. We've talked about it many times on the channel. I am a big fan of adding Microsoft shares down here around 475. I've been waiting for it for the past 4 or 5 months. It's finally here. And as a result, I will be adding shares in this pocket. Call it 480 down about 450, which is the support range. I'm not trying to pick the bottom, especially when I'm accumulating long-term shares. All I'm looking at, guys, is the valuation now, which is a bit favorable, under a 30 forward multiple, which I was waiting for, 1.66 peg overall, and phenomenal earnings to complement that. That being said, Microsoft is still down about 12%. Previously, a few weeks ago, well, last week, it was down about 15% from the highs. That was the best. But if we revisit down there, I will be a fan of doing a couple things. Number one, selling some puts under this region right there, but also adding to some long-term shares. On to Netflix right now. Netflix up 1.44%. Very solid push by Netflix today, but we know who controls the trend, right? Still the bears. They control the daily downtrend right now, unfortunately, but it is true. In terms of the retracement size, not a bad retracement right now, 50% retracement. The bulls definitely creating a lot of space off of those fear lows down here. We will see, can they progress a bit further and set us up for a nice trend change and attack the resistance range? 115 down to about 111 is that resistance range. It was previous support for the bulls a few times, right? That's where all of the price action was to be had. So they may not be able to get through it in one clean shot, but if we two-step this, it will look nice in terms of setting a weekly bottom, and the bulls need it, man. We've been in a weekly downtrend for a very long time right now. So you want to see a big bounce, get the dailies back, and then try to make an attempt to get the weeklies back to set an end to this 5 months, 6 months worth of monthly consolidation. I am buying Netflix down here for my long-term portfolio. It's currently at a relatively low multiple, low 30s price to earnings, a 1.6 peg. So Netflix is additionally another company that I'm looking to add shares to the long-term portfolio. I am in leap call contracts in this one as well, and I will be selling some put options towards these lows all the way down into our support range, which starts at about 100. Moving on to good old NVIDIA, which has been just tossed around left, right, and center over the past, call it month and a half of trade, right? Beautiful GTC conference. Everybody forgot what was said. AI trade starts to unwind. Beautiful earnings. Then the algorithms 2 Thursdays ago go absolutely nuts and unwind all of that as well. Then we get the Google versus NVIDIA whole showcase on Twitter and everywhere, right? And now NVIDIA is just kind of still back in the same range it's been arguably since the month of June and July. That being said, though, they are in this range with better guidance. Never forget what NVIDIA said the last few weeks, right? A lot of people forget what was just said for earnings. Around 180, you're trading at a low mid-20s forward multiple, about a 26, a 1.15 peg. These numbers, guys, are pretty cheap for a company that's doing all of this from its most recent earnings report and recent earnings guidance. So please keep that in mind. NVIDIA, indeed, for me, is a buy at these locations, although it might be a bit bumpy because it's being pushed and pulled with sentiment right now. Not because of fundamentals, no, because of sentiment, depreciation cycles, arguments between GPUs and TPUs, even though every single company, whether they make TPUs, ASICs, right, or whether they use GPUs, they're all demand constrained. People forget that you can't produce enough TPUs and GPUs for the amount of demand that's on the table right now. We can have the whole GPU versus TPU discussion in 2 years. But as of right now, there's just not enough demand, and people just forget that, right? A lot of sentiment surrounding this name right now. And you guys know me, I love a good sentiment sell-off, especially for a high-quality company with very strong profit margins, a very wide moat, and just, insatiable demand right now. I love myself a good sentiment sell-off, and as a result, I have been playing leaps on NVIDIA. I have been playing short puts on NVIDIA. I have been adding some NVIDIA shares as well. I'm a big fan of benefiting from these discounts overall as we move through weekly consolidation and through monthly consolidation as well, which is just, in my opinion, normal price action. Support stays put down here, 170 down about 160, this good old range the bulls have protected for a better part of the last couple months, and that culminates in the 12 EMA as well. And you guys know the drill, right? Has it been a good proposition to buy NVIDIA when it's close to the 12 during this big old bull face expansion? Yes, and I will be taking that opportunity again as they keep offering it, right? Moving on to Tesla right now. Tesla, not too bad of a day today. I mean, they did a whole lot of nothing. Basically flat on the day, but daily uptrend recaptured and recapture of the slight previous support range, which was then resistance, which is now maybe support. EMA's there as well. 430 down about 415. It's a tight little range, of course, but the bulls are putting some good work in to kind of control this one back. You get some expansion. Well, clearly you're going for the range highs up here, 465. The weekly doesn't look too bad, although we lost the weekly uptrend. It's a nice size bounce so far. You got to give it to them, right? A little bit more, and they might just be coming for the weekly uptrend shift again. And as a result, you might just have set your monthly higher lows and looking for some possible expansion on Tesla. I know. People are in disbelief about Tesla because they focus on the short-term negatives, but the long-term positives are currently carrying this business, namely FSD, namely robotics with Optimus, but something that people forget, right? Tesla has a very big energy business and battery storage business, and that's something that a lot of these data centers will need. So Tesla is arguably very well positioned for energy purposes leading into the AI data center ramp. That's been something that people have been focusing on recently for this brand right here. So Tesla, not looking too bad, I will admit, but if you're focused on the short-term car business, well, obviously these valuations don't make sense, right? Moving on to Palantir right now. Palantir down about 0.57%, and good old Palantir, man, they've been struggling with this area right here, 185 down about 170. I mean, it was a very big range, right? And sadly, we lost it. It was a nice weekly uptrend. Well, it was a weekly uptrend this entire time, yeah? And then we kind of lost it by unwinding right here, flushing the lows, big flush, and now you got to do a lot of work to get it back. And it all starts with the good old daily uptrend. Big daily downtrend. Nice move by the Palantir bulls, right? That is a very attractive bounce size, 80%. So if we get rejected at resistance right here, a few charts look like this. You got a lot of space off the lows to set a higher low. Anything above 148, looking for a new higher low. And to get the daily uptrend back, only when you get the daily uptrend back do you know, okay, that's likely your weekly low, and maybe we can make an attempt at getting the weekly uptrend back eventually because we lost it, right? You engulf that one, you lost that one, and as a result, maybe you can make some work into the furtherance of this monthly uptrend overall. But Palantir is one that I am considering possibly adding to. If you come back down here, 150 down to 140, touch the 12 EMA, either using short puts or just shares to kind of capture those levels if we do come into it, as we kind of did just about a week ago when we clipped below 150 right there. But a lot of time left on this trade, a lot of time for the end of the year rally potentially on Palantir. At 150, the valuation is, I don't know what word to use here. Cheaper, more manageable than before while still being expensive. Anyways, you guys know the drill, right? The valuation is not a concern for most people. We'll see if eventually it catches up to them or not. Moving on to SOFI right now. SOFI down at 2.32%. Rejection and resistance, 30 down to about 28. This has been a big level, guys. Resistance, support, and now acting as resistance again. So it's a very important level, this whole 30 down to about 28. But one thing is for sure, though, nice bounce, yeah? Daily downtrend by SOFI, full 100% engulfing move. So you guys know the drill. A lot of space created off the lows. Anything above 2350, looking for a new higher low. Maybe make an attempt at smashing through this again. If they can't get it done in one clean shot because they run out of power and strength, maybe you need a bit more accumulation and try it again. And if it does swing down here, you guys know what I've been talking about, right? Short puts for me down here, 25 down to about 23 all day. In terms of the valuation of SOFI, around 27, which would be the pullback area. Would it be good to add some shares for the long term? Well, it's a 1.1 peg and a mid-7 price to sales, which is not terrible for a company growing revenue and EPS at these clips right here. So I'd be a fan of maybe nibbling on some SOFI shares. I'm definitely not going to full send it, but a little bit of nibbles. You guys know where I built my position overall. Most of my position was built here. So I have enough SOFI shares, but if I was looking to add, possibly for the 3 to 5 year expansion thesis of this company into a 45, 50, $60 billion company, well, that would be an area that I would be targeting. But for any swing trades, I'll be playing some short puts down there under the market. Two last ones right now. Uber, very decent decline today. Same thing though. A lot of these companies look the same, right? To where we have a daily downtrend, we smashed through a big support level, and now the bulls are back testing this as resistance, right? That was the case on so many things, right? SOFI, that was the case. Palantir, we just looked at, was the case as well. So many different Netflix, this was the case as well coming into it. Microsoft, this was the case, right? So if you get rejected into all these levels, right, and you get sent a bit lower, just understand it could be a nice opportunity to sell some puts into the lows where we just were. That being said, Uber down here, support is 83 down to about 77. The valuation down there is very fair in my opinion. It is still fair at 83. You're trading at a mid 1.5 PEG ratio right now. You're trading at a low 20s forward multiple, which is also not too bad. A 5% free cash flow yield. So Uber is front and center for short puts for me, and maybe adding some shares to my long-term portfolio as well. That being said, the bears are still in short-term control of this chart. The bounce size is not too bad as of right now. You're looking at a 50% bounce. So you do have a lot of space, but you still need to give me the daily uptrend shift for me to say, yeah, that is definitely the weekly low, and we're not going to go for one more weekly leg of selling, right? And also that is possibly the monthly higher low, and you might just be embarking into a next beautiful quarter of expansion for the business. So I don't know if that's going to be the case. As a result, I can't really do short-term swing trades, but what I can do is add long-term shares here or play the wheel at valuations that I enjoy. And now lastly, good old TSM. TSM down to 1.31%. This one is very choppy, man. Support down below us, 280 down about 270 overall. The bulls are trying something, right? It's very choppy madness on TSM. Nice engulfing move. They're trying maybe to reset the daily uptrend. So we will see if they can use this support as a back test and then give us the daily uptrend, which would tell us that weekly consolidation is finished and that we're not just going to unwind something like this and head a bit lower on the monthly consolidation phase of this stock. So for me, TSM, guys, it's just a little bit unclear. No swing trades for me, but if you are looking to swing trade this one, you got a pretty clear stop loss area, right? Below these lows, then pretty much targeting all-time high expansion and then beyond 320, 325, etc., right? But if I'm looking for long-term shares, I mean, TSM is not cheap up here. It's also not expensive. It's kind of like Google in that respect, right? It's a 28.6 for PE. It's a 1.7 PEG. Not too bad, but this is another company whereby the fundamentals are not bad, but the technicals are not lining up, right? If we had a better retracement size down here in the 12 EMA, such as many other companies on this list had, then we would have confluence of technicals and fundamentals lining up at the same time. This is just really good fundamentals, but the technical pullback, if I'm being honest, it's not the best, right? You're still in monthly overbought conditions. You're still very extended from this 12 EMA. So although we have been consolidating for a while, I mean, I'm not selling any shares. I'm not really buying any more TSM shares up here. I'm just holding, but I'm also not doing anything like leaps or short-term call options or things of that nature. I think they're just better risk-to-reward plays with clearer technical setups, in my opinion, in this whole list that we just covered. And that wraps up everything for our overall big tech list and the market rundown. Hopefully you guys enjoyed. Now let's dive into some of the biggest gainers and losers of the day. So I won't be taking you guys through absolutely everything. I'm just going to take you guys through a few names that I'm possibly exploring for the next short-term period in terms of selling put options or possibly some trade ideas, right? So number one is going to be Oscar. We talked about this one a lot recently, but Oscar, in my opinion, down here, $14.5 down about $14 range is an area that I would consider for selling puts again. Matter of fact, I did so today. I do think this company can be the fastest horse in the whole healthcare insurance recovery story. We had a nice little pop last week, right? Last week, excuse me, the stock was up like 33% in a week. If you get a nice retrace back down here into support, it's been an area that I've been playing frequently this year, and every time it comes down there. But you can see it's been nice support for the bulls here for the past couple of years overall. So that is one that I'm definitely considering in the near-term future. Another one would be Shopify, of course, right? So Shopify's pulled back significantly, and if I can find some short put options down here around 130 to about the low 120 region, that will be pretty good for me, because essentially what we're looking for here is a monthly higher low, and all the price action of the 12 EMA is located right here between the 130 to 120 range. That is an area that I would not mind positioning in Shopify for either some short puts under the market to kind of play the wheel, but also maybe even for some shares. We clipped into that area briefly over the course last week or so, and if we do have a bit of a sell-off here on Shopify, I would not mind benefiting from some of those discounts if it's a stock that I'm looking to build into and carry into the next 3, 5, 6 years, 7 years type of thing, yeah? Another one that could be interesting is HIMS. HIMS, just for valuation purposes. This one is a very polarizing stock. Either people love it or they absolutely hate it. I like it for the valuation and just because I think it could be an interesting longer term bet as kind of like a side bet type of thing, right? Good subscription model, good user growth overall, but of course has gotten caught up in the GLP-1 drama that has been affecting stocks like Novo Nordisk and, otherwise Eli Lilly's just been running away with it as of right now. But HIMS, unfortunately, coming down today about 5.66%. They didn't really do anything to warrant such a steep decline, just being unwound with another part of the market. Down here, though, low 30s is not a bad area if we're looking to kind of start a feeler position on HIMS. If you have a 2, 3, 5-year thesis into their 2030 guidance, which does state they'll be generating $6.5 billion of revenue. The company's only worth $8.5 billion right now. So down here, not a bad opportunity for the wheel, but maybe also a nice side bet if you're looking for something along those lines. If I move a little bit further, we're not going to cover every company here, but Rocket Lab, notable shout out to Rocket Lab here. If Rocket Lab has a bit more weakness, guys, I mean, we covered their earnings, right? They had solid earnings, but they did push out their launch of the Neutron rockets into the second half of 2026, which was a little bit disappointing. Rocket Lab is just a massive, guys, monthly retracement, right? So if Rocket Lab comes down here, let's say to the mid to low 30s, it would be a nice little pocket, in my opinion, either to play. Well, if you're playing the wheel, you're playing it aggressively, of course, because there's not much support here, right? So you really have to not mind being assigned. But starting a little bit of a side bet position on Rocket Lab, if it's something that you're interested in, I think we're getting a pretty good discount. And if you have like a 2, 3, 5-year time horizon type of thing, it might be a nice area for you to consider maybe adding some shares or starting a position if you enjoy this company. I'm not trying to force it on you guys. I'm just telling you guys what names that I'm looking for into the near-term future. Another one of those names could possibly be Robinhood. Robinhood got rocked today a little bit because obviously of their exposure to crypto. Now, it's been a daily downtrend. You know, a lot of names just got crushed during the November sell-off, and you're kind of looking for a bit of a daily uptrend recapture. If you move a little bit lower here into tomorrow's trade, it could free up some nice short put opportunities into the low 100s. Good volatility on this options chain overall, but also it could be an interesting area, guys, like lower 100s. We talked about it when it was there, yeah? Not that bad. The valuation of Robinhood actually has come down. They'll be expanding more into, I have it right here, right? After the earnings, short selling, social trading, and then banking, obviously, with a lot of prediction market actions as well. So Robinhood could be quite interesting, which is why I don't mind playing the wheel down on there, down there on it, right? In terms of the lower 100s, which is the 12 EMA. But also maybe, buying some shares down here would not be the worst proposition if this is your style of company overall. Moving on to Spotify. This is another interesting one, guys. Monthly downtrend on Spotify. This doesn't happen too often. They're going into a big consolidation phase. Now, when we covered their earnings at 6:30, it wasn't a bad deal, right? At a 1.34 PEG and a 5.6 price to sales. But if Spotify makes its way down into the lower 500s, I may actually consider this one for a longer term bet. Now, it's true that their monthly active users is slowing down, right? It's kind of like Netflix, right? Big user growth, and then it kind of starts to taper off. It's still growing, but we're at the taper off phase, which might be why the stock movement is slowing down a little bit too. But, if it does come down to the lower 500s where we were standing during tariffs, that could be a very interesting bet for something for like a long-term portfolio if Spotify is something that you enjoy. And the last one is Grab. Grab is kind of also a little side bet for me that I've been building here recently. The monthly is pretty good, right? It's been a monthly uptrend, although very choppy. They are arguably the de facto leader in terms of either ride shares or food delivery services in Southeast Asia. And I do not mind at all accumulating some shares on Grab. Call it low 5s into high 4s. I don't mind building a share position here and carrying it into the next few years as we seek to just benefit from the company's expansion overall. Really good expansion, man. They're coming into profitability, right? Profitable net margins all throughout this year overall. And additionally, we do have very nice revenue growth for this business over the next 4 years. So that's not really a question, but the price action is providing us with a nice re-entry opportunity after this pop. Now we get the breakout, we get the retest, so I don't mind playing it all the way down there. Those are just a few of the names that I kind of wanted to cover today. Special shout out to other names such as ANET. ANET down here, super solid company, guys. 115 on a low 100s would be a wheel candidate for me, but also maybe for some shares. ANET is kind of like a play that you really can't get beyond or that you really can't really pass up. If you're into networking components for data centers, ANET is your market leader. They're not going anywhere. Very high margins, very high growth rates. I think they will be front and center in the data center trade, at least for the next few years. So if they do give us the good old breakout retest in the 12 EMA down here, could be an interesting proposition to maybe pick up some shares if you're already in, or if you wanted to start a position. Not too bad at all. And maybe one more, I don't know where it is. I just went through it. Anyway, it's the energy names, right? We've been talking about the energy names a lot. Vistra, very nice. Natural gas, nuclear, solar, and battery storage purposes right there. Around 180, the valuation is quite compelling. Beautiful technical setup as well, right? Just a very long breakout retest into former highs from 2024, 12 EMA. So this is an area, if I were looking to build a position in some of the energy companies, this is not too bad. This one, you know, some of the Duke Energy, right? Duke Energy is also not too bad down here. It's also back testing. You can see that big flush on the candle. But look, it's been a very nice area of price action recently. And I do believe they are going to be one of the biggest winners here of the energy boom, essentially. So Duke Energy, not too bad. Next Era Energy, also not too bad. We're just looking for a bit of a monthly retracement down here into support into the low 80s. Not bad if we're looking for this big old breakout. Just take a look at this, right? It's a massive inverse head and shoulders right there. I think Next Era Energy, after not breaking highs for the past few years, I think they're poised to do quite well into 2026, 2027. And you can see that from their EPS growth right here. You can see that from their revenue growth right here as well. These are very solid, just utilities grid players overall. Of course, there's more, you know, there's the Constellation Energy for nuclear power specifically. And then there's a lot of the smaller players, which I'm sure you guys want me to talk about, such as the Bloom Energies of the world, right, which had a tremendous rally. Bloom Energy for me, maybe 70s type of thing. I know that a lot of people are talking about FLNC right now. In tandem, this is battery storage in Europe, of course. It goes very well hand in hand with the NBIS trade as well. So FLNC could be something, bit of a small cap position there that you kind of buy into and just wait for the further rally expansion as they expand their offerings into Europe. It's going to be very bumpy, very choppy along the way. So if you are buying this style of company, you're going to have to wait. And then the US counterpart of that is EOSE, which also does battery storage. If you start pulling back down here, maybe into 10, into 9, something like that, I might get interested a little bit just for these thematic plays for energy overall. Some of the larger cap utilities players, right, that we went over, plus GE Vernova, which I didn't mention as well, nice consolidation phase. Some of these very large cap players, and then if we complement, you know, with a few of the small, fast-paced runners like these and just build some positions into them that we're willing to hold for the expansion of the thesis. I'm not trying to pick the bottoms. No, I'm just trying to build a position for the expansion of the thesis over the next 2-3 years, and obviously complementing with some neo cloud providers such as NBIS down here at 90. We were talking about a decent opportunity. Iris Energy down here in the mid to low 40s, not a bad opportunity. CoreWeave down here in the low 70s, not a bad opportunity, but obviously it's going to be very bumpy. There will be some dilution effects here. There will be some scaling issues because a lot of these companies have to bring power online, bring these data centers online and build them first. So it is going to be a bumpy trade with many narratives in between, but I think positioning in them for the next 2, 3, 4 years for the AI and data center ramp could be quite beneficial, although it will be choppy in the short term. And I'm not trying to call local bottoms because the price action doesn't show us that they're set just yet. They could be interesting accumulation trades that you might want to hold as a portion of your portfolio overall. In terms of the biggest winners of the day, we just covered a few of them, NBIS and CoreWeave. Shout out to all the other discretionary companies that are coming back, right? Like the Deckers Outdoor Brands of the world, the Nikes of the world, the Kavas, the Chipotles. Not my favorite trades as of just yet, just because we don't really have any confirmations that the consumer is truly back. But I get it. If we want to position slowly into some of these companies for the longer term, it might be an interesting proposition. Obviously, Airbnb is you know, one of my favorite companies down here. We cover it on the wheel every single week. I think the valuation is quite compelling down here on Airbnb. The same can be said about a company like Booking.com, which has just been lower and lower and lower recently, trading at some of the highest free cash flow yields that it's had over the last few years, some of the lowest price to earnings multiples that it's had in the few years as well. So the travel companies, I am a big fan because people have been spending on travel. They haven't really been spending that much in terms of eating out away from home like Chipotle, or even on apparel on things such as Nike. But, you know, this might be a no recession thesis. If we're building positions in some of the discretionary names, we can't really anticipate that the charts are going to do this, right? No. You got to alleviate some pressures in terms of the jobs market narrative. You got to alleviate some pressures in terms of the K-shaped economy and consumer buying power. Inflation needs to come down. So it's going to be a very long form trade, very long form trade. So personally, I'm just playing a lot of tech and AI still. I'm not really playing any consumer discretionary names. I mean, other than Airbnb, Booking.com, which are the names that have kind of held up the niche of consumer discretionary that's held up kind of the best. I know the share prices don't show it, but at least they have very solid fundamentals. Their fundamentals aren't eroding like Nike's or like Chipotle's or like Kava's or like the food companies or otherwise, right? At least these don't have deteriorating fundamentals. So I'm playing these during their respective pullbacks. And then additionally, I'm playing a lot of tech, a lot of AI stuff, as that is currently still the prevailing narrative overall. So those are just a few of the names that I did want to cover. We'll try to do, we'll try to cover as many as possible on a daily basis overall, and kind of cover all the bases in terms of all the prevailing narratives and my thoughts on those things overall. I'm not going to give you guys day trades or whatnot, just ideas for narratives and longer form positioning overall when I do find good value in some of these narratives overall. So that's everything we had for the biggest gainers and losers of the day. Now let's take a look at the portfolio, shall we? So in terms of the trades, I'll take you guys through a couple different concepts. Number one is going to be all the wheel trades. You might remember that the last time I showed you the portfolio was right around, well, last week at the beginning of the week, essentially, right? Whereby I went over all the trades that I made Thursday, Friday, and into Monday of last week when the VIX was still high for some of the wheel trades. Some of the wheel trades, you might remember, were very long dated contracts, and a lot of those have since been wound down. So we closed the Netflix, right? We had a Netflix 102 short put for December 19th. We got it for $257. We closed those for 80 cents. 70% win in a week on a monthly contract. Additionally, we did the same thing with NVIDIA. When NVIDIA was plunging last week, we got these December 19th short puts, 155 strike for $3.85. Closed them for $1.17, which was also a very nice 60+% win in a short amount of time on a monthly contract. SOFI, same concept. When SOFI was plunging, we got a 22 short put for December 19th for 81 cents. Huge. It was almost 4%. We closed those today for 21 cents. We also did we have anything else on longer form ones? I'm not sure, but we did open a new Visa with all that capital that we freed up. Visa in a very attractive location, 327.5 strike, December 19th for $3.90. It gives us a really low break even on these guys, $323. I mean, if we can't buy Visa at 323 bucks, I don't know what we can buy in the markets anymore, but I did repurpose a lot of these wins, a lot of the capital into a brand new trade with full premium. There was other trades that were closed as well, such as the AMDs, which we had recently last week when AMD was plunging. We got the 175 strike for December 19th for $4.10. We closed them for $1 today, once again, freeing up some capital. Airbnb was a trade that we took together last week, 112 short put, $1.16 for December 12th. That was a 2-week contract, 2.5 weeks, as a matter of fact, when we took it. Closed that for over 50% profit, 60% to be specific, in a few days on a 2-week contract. So you see what I'm doing here, guys. When the premium gets pulled forward on these bounces, I'm closing those trades, realizing the gains, freeing up some buying power, and resetting into other plays that have full premium inside of them. So I really benefited a lot from the high VIX, and I loaded up the buying power, got some phenomenal trades out, right? And now we're kind of back out of those trades into buying power, or rather into rather full buying power minus the V's that we took today. Oscar is a brand new trade that we took today, 14.5 strike, December 12th for 17 cents, just over 1%, respecting my little area down there. And also another one that you may or may not have seen, we also had the SOFI 24s. Those were for November 28th. We got 46 cents. Well, we were able to close them last week for about 90% profit. So those are just a few of the trades. And now only even Amazon. Maybe I didn't show you the Amazon. When we sold off on Amazon as well in the last week and a half, I had the 215 strikes for $4.20. We closed those for $1.32. This money, when I closed it, I used to pick up the AMDs the same day, right? Just repurposing one trade towards another trade and just reallocating the buying power. So I'm a big fan of doing that when we can. So those are just a few of the wheel adjustments, because if I show you the portfolio, you won't see them anymore, right? All you'll see is these small little wheel trades that remain. They grabbed December 19th $5 puts, which we're currently up nice on 70%. The HIMS December 19th 33 put, which we opened last week. It's currently profitable, but still kind of oscillating here. The Oscar, which was new, which we just described. The Rocket Mortgage, these will be called away this week. We've been in this trade for like a month and a half. We have a cost basis on Rocket Mortgage, I think like 15 or something like that, 15.77. We'll be called away on that. We'll make a decent amount of money on this wheel. Uber, these I opened, funny enough, the Thursday when the markets were, well, not before they were crashing. We were up here. On that day, Uber is one of the only names that was down 2%. The whole market was green except for Uber. So I got into Uber. And then funny enough, the entire market crashed, and then Uber crashed as well. We are still above my assignment price. So I've been in this one for like a week and a half at this point in time. 85 puts for Friday. We will see if we get assigned. Uber's still above 85. I don't know if I get assigned. I don't mind being assigned because it's in my area, but still, we're currently up on this trade a little bit after being underwater on it. And the new visas, right? So those are the current outstanding wheel trades. We've wound down a bunch of them. We have some nice buying power. We repurposed some of that buying power towards Visa with a couple other trades outstanding. Now, in terms of other stuff, it's just a bunch of stuff that you guys already know. Maybe you guys don't know about some of these. The grab leap calls. I have these $7 calls, small position, 5 contracts. We got them for $1 just last week at some of the grab lows. They're currently up right now, but we still haven't gotten that much lift. My gold trade, these gold call options we had for April, the $80 calls, those are up about 22%. I'll remind you where I got these. We talked about them on the channel before, but just to remind you, right, we played the gold pullback here, kind of the breakout retest, yeah, in this whole range. So now we're kind of up on that gold trade, but it hasn't been moving that fast, but we are up on it overall, just to remind you guys where we're at. The Bitcoin call options that I got when Bitcoin was around 100,000, just a bit below, are now down 50%. Good thing I have until June 2027. I'm not adding to these until I see a new daily uptrend. I'm not just going to add to them blindly. I'll wait for a new daily uptrend and then we'll kind of maybe average into these and then ride whatever we have. These Sentinel-1 calls are still down right now. We were up on these. Now we're down on these. We have until January 2027. The TLT calls, these are going to be probably ones that I cut maybe after the December rate cut. I'll wait maybe for a final rally into the end of the year if I can, maybe into January. But I do want to wind these down and repurpose the capital. Well, I've already repurposed the capital without really closing them. I'll show you what I bought a bit later. Visa, these 320 calls, we've been in these for like a month and a half. They were up like $2,000. Now we're down $1,000. So like a $3,000 swing. It does impact the net equity of the account overall, but I still like this call. I have like a year and a half of time for Visa to get its darn act together and start pushing the levels. Very high quality company for me. I don't really mind, but you know, all these swings do impact the value of the portfolio overall. Moving on to the other trades, some of these other trades that you guys may or may not have seen, I'm not quite sure. But the ones that I want to focus on are AMD and Amazon, these leap call debit spreads. They're doing well, but obviously they're not at the highs, right? When Amazon was 260 and AMD was 260, well, both of these debit spreads were about $1,000, $1,500 more expensive than they are right now. So we're recovering. We're still in profit territory, but still we've given back some of the gains. So that also contributed to the portfolio pulling back from some of the November highs. Other trades such as CoreWeave used to be a profitable trade. We were up like $2,000. We're now down $600. Right? So this one, good thing I have until December 2027 for this leap call debit spread, 135, 280. So I will let it do its thing. I'm not going to average into it or anything like that. I will just let it cook silently in the background, right? This is my CoreWeave position. I have a similar position on NBIS, December 2027 call debit spreads, 140 versus 200s. It's a fairly aggressive call debit spread. We're currently down on it by about 11%. We will see what happens, but you see how much time I put on these contracts because I know they're going to be super volatile. I'm not adding to them just yet. Other leaps that we have are Netflix. Netflix is something new that we did about 2 weeks ago. We're currently down on it by about 4-5% right now, just because we opened that Netflix trade when the trade was a little bit higher. We played this pullback right here on it, and we're now just down a little bit on that, and we have burned a couple weeks of time, but you guys can clearly see, right, how much time I have on these contracts. December 2027, 114, 180, very good risk to reward there. My new trade, NVIDIA, I opened this one on Thursday. NVIDIA, December 2027, debit spread leaps, 190 versus 330. Good risk to reward. It's currently up slightly as NVIDIA was green today, but a lot of time on that contract. We will see what happens. We still have the Rubrik leaps as well. They have earnings on Thursday. We'll see what happens. We used to be up on this contract by about $700, $800, and now we're down $285. So that's another $1,000 swing. But see, a lot of these leaps, because I have a lot of leaps in this portfolio, obviously when there's such violent swings, it'll swing and impact my net equity, right? But we have been making really good money on the wheel, and that's what I do. I use the wheel to farm a bunch of premium, and then with that premium, I will keep a common exposure of leaps. For this size of account, 50, 60K, if I'm looking to grow it aggressively, keyword aggressively, usually I'll keep 40 to 50% of the account in long duration leaps. Not concentrated leaps, not everything in Amazon and everything in NVIDIA, right? I'll have a lot of different leap positions, but total exposure, if you notice here for my long options, long calls and debit spreads is about 30 grand, which is now above half the portfolio. But, you know, when the portfolio was like 60K just about 2 weeks ago, is about half, right? So I try to keep the exposure relatively similar, right? At any point in time. The NVIDIAs I opened recently, but under the premise that I would be closing the TLTs soon, okay? So I'll be closing these TLTs soon. It'll lighten up the exposure a little bit. And then we just have a bunch of small little call debit spreads, some of which have earnings soon, like CRM and Adobe. They have earnings soon. Meta, we took this one into earnings. This one is a dud. This will be a tax loss harvest for us for sure. And then Resolve, which is just a small lottery trade. It's come undone. We're pretty much down 75%, but it's only $250. And then SPGI. SPGI actually has a good chance of recovering before our January 2026 expiration. So we'll see what happens there. We're down a little bit on that one. So these remaining small swing trade call debit spreads are the only ones that I still have that were underwater. All the profitable ones, we closed them into end of October, early November when the markets were good. And these are kind of the ones that just never really moved for us, that we have a lot of time on, that we're just kind of holding, but they're all very, very small, right? A lot of my capital, the biggest portion of the capital, are obviously in all the leap call contracts that I have a lot of time on, and that I have pretty decent entries on overall. So that's just how the portfolio is looking and which trades I have remaining into the rest of the week. I will be looking on any further weakness for some short puts on the top 5 options plays that I gave you guys yesterday. AMD pullbacks, Amazon pullbacks, NVIDIA pullbacks, Netflix pullbacks, SOFI pullbacks as well. I'll be looking to kind of reload some of the wheel trades that I just closed recently and look to just get back in and just keep farming them, right? So that's kind of the markup of the portfolio right now. That's everything for today's video, guys. Hopefully you enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing if you're new. We do these videos every Monday through Friday after the close. So hopefully I see you back in the next videos. And last but not least, if you have any questions, please feel free to leave them down below in the comment section. I always love hearing from you guys. Feedback on the videos or any trade ideas that you guys were thinking about, right? Definitely leave it down below in the comments. I always love reading what you guys have to say. And last but not least, if you guys were interested in joining a community of over 300 traders and investors such as yourself, if you're tired of trading the markets, investing in the markets all by yourself, well, you may consider joining us and doing so as part of a group. The link to join our group is down below in the video description, and I have reactivated, upon popular request, the Black Friday code. The promotional code for 40% off your first month. If you want to try our Discord group, see if it's a good fit for you, you can get 40% off your first month. You can cancel anytime, by the way. There's no minimum lock-in period or anything like that. It's month by month, right? And the coupon code is Friday in capital letters. I'll let it run until midnight tonight, which is the end of Cyber Monday. The code's been active for like a week at this point. We have so many new members. I'm looking forward to meeting all of you guys soon as well. In the Discord, you get access to a few different things at the same time. Number one, you get access to all of my trades in real time, whether it's the wheel trades, the leap trades, any additions to my long-term portfolios, and everything in between. Whenever I put on any trades whatsoever, you guys get the alerts in real time. You also get access to our private morning live streams, Monday to Friday, where at the open, I trade live in front of you guys and also take all of your questions on your stocks, your options, your long-term portfolios. It's the best place to ask me, hey, Will, what do you think about this stock? Hey, Will, what would you think about doing a leap on this stock, et cetera, et cetera, et cetera? Any trades, positions, things like that. I always love answering your guys' questions in the live streams. And at least I can do so by showing you the charts, talking about the fundamentals, talking about the options chains, et cetera, et cetera, et cetera. That being said, you also get access to our private video section, which has 15 hours of educational content, how I choose my leaps, how I run my wheel strategies, because I run many different variants of the wheel strategy that I show on YouTube. All the educational content for those wheel strategies is in there. Videos on technical analysis, fundamental analysis, how to build a long-term portfolio, how to build a trading account depending on the size of equity that you're trading, the best risk to reward trade-offs, etc. 15 hours of educational content. All the secret sauce is there, and I will never put those videos on YouTube. Last but not least, you get access to our chat rooms. You can chat with me throughout the day or chat with our other members, ask me questions. I'm very fast to respond. And last but not least, you get access to all my charts. All of these charts that you see right here, support, resistance areas. Whenever you see fundamental annotations on the charts, you can literally just copy paste everything. A few clicks of a button, 15, 20 seconds. You get to copy paste all my chart layouts. Whenever there's annotations, support resistance boxes, you just copy them. And all of my watch lists that I use to trade the markets every day. Those are all of the main benefits that you get as part of being in the group with us in the Discord. And you also get to have a lot of fun in the process. So if you guys are interested, don't forget to use coupon code Friday in capital letters. I'll leave it down below in the video description. And that is also where you can click the link to join our group. That's everything for me. Take care, guys. Have a good rest of your evening, and I'll see you guys tomorrow after the close. Peace.